Hey everybody, happy Monday. Today is Monday, as I just said, so I will be working on finishing up this week's issue of MMT Trader, and it will be out later today. So if you are on the email list, you will get it later, or you can go to the website later on at pitbulleconomics.com. Click on the tab that says products, and you will see a link that says current and back issues. If you are not a subscriber, or if you are not on a 30-day free trial, you can get the 30-day free trial. Just go to the same website, pitbulleconomics.com, and right there on the front page it says get the 30-day free trial. I would advise you, if you're interested, to get it before September 1st, because on September 1st the monthly subscription price goes up to $125 per month. It is currently at $100. If you get it now, you lock in that lower rate. Okay, let's talk a little bit about what's going on. We have some more corrective action in the stock market, which I do not find surprising. As a matter of fact, I think in the big picture, one could argue very strongly that the entire rally since the election day could be unwound, because it was all based on expectation. It was based on expectation of policy, none of which has come to fruition. We all know this. Secondly, the firing of Steve Bannon on Friday, which I sent out an email with regard to that to MMT Trader subscribers. And if you want that email, again, if you're not a subscriber, just sign up for a 30-day free trial and I will send you that email. But just to summarize, that should have been viewed as a positive by the market. As a matter of fact, there was kind of a humorous news story, which said that the traders on the floor of the New York Stock Exchange, if you could even call them traders, I mean, there's nothing going on down there because it's totally computerized. But I mean, the population, if you will, on the floor of the New York Stock Exchange cheered when they saw the news of Bannon's firing. Those silly boys down there. Why is that? Because Bannon was viewed as the anti-establishment advisor to Trump. He was for this kind of disruptive trade policy, imposing tariffs to relocate production back at home. He was for tax cuts for the middle class and tax increases for the wealthy. He was anti-war. In other words, he was against a lot of the establishment things that the market has come to love. All right, the neoliberal order, trade deals, privatizations, tax cuts for the wealthy, trickle-down economics, all that stuff. Right? He was against that. So you would think that his firing would have triggered a stock market rally, and it did on Friday for a very, very short period of time. And then, as you can see, there's no follow-through. And that's kind of an ominous or a bearish development, I would say. Okay, so you have that going on. Gold, I want to talk about gold. A very interesting situation with gold right now. I just sent out an email to MMT Trader subscribers and people on the 30-day free trial. If you want that email, again, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. But I will summarize, and there will be a lot more about this in the report today when it goes out. But we now see the speculative long position in gold at the highest level since November 8th of last year. That happened to be election day, and that also happened to coincide with a top in the gold market, a pretty significant top. In addition, the ratio of shorts to longs by producers, gold producers, 11-1, that is high, okay? In the recent past, every time we saw that ratio get up to 11-1, that has also indicated a top, all right? However, gold is up today. It is not selling off. It might not end that way, but we'll see. If gold can manage to, I think, close above 1,300. Not that there's anything particularly important about that, but these market participants, they love these big round numbers. And with the expansion in the open interest that we are seeing now, over 508,000, that's the highest in over a year. we may have now entered into kind of a new environment for gold where you're going to see a lot more speculative activity, and that could easily push the price up a lot further. We have to see. The first two things that I mentioned have been bearish indicators in the past, okay? I'm not talking about the fundamentals. The fundamentals for gold longer term are bullish. There is no question. You know, mine supply is coming down. Next year we're going to be down with mine supply. So all that, I'm not talking about. These are technical things, okay? Market participation, market composition, etc. Anyway, I'm going to get all into that, as well as everything else. What's happening with oil, what's happening with currencies, what's happening with the dollar, what's happening with stocks, what's happening with bank credit. Everything is going to be in the report, as it always is, which will be out later today. So, if you want the report, go to pitbulleconomics.com. Get it now because it's going up in price, and it's still cheap at $1.25 in September. All right, everybody. See you later. Bye-bye.